What's going on, everybody? Welcome back to the Schaefer's Stock Market Podcast. This is Josh Selway talking to you guys again. I'm an editor at Schaefer's Investment Research. We didn't get a pod out last week. I did my best, even tried to get it in on the weekend, but it didn't happen, so I'm coming out with one early this week to try and make up for it. If you have not already, please subscribe wherever you are listening or give us some feedback, review the show, whatever you want to do. That would be extremely awesome. First off, I wanted to start with a quick overview of the broader stock market in the past few weeks here. We have stocks climbing to all-time highs, even though we have impeachment hearings coming out of Washington and that playing out in the background, but that doesn't seem to be affecting stocks at all just of yet. You still have the trade uncertainty, but so far, stocks keep going higher. This week, the attention has turned to retail. The numbers haven't been good. Home Depot, an ugly outlook. Their executives talking about tariffs, keeping that trade angle in focus specifically. But tech stocks have kept this rally alive, and it's to the point now where the Wall Street Journal, actually, one of their main stories today was that the technology sector is heading toward its best year since 2009. And this is even coming despite all the regulation concerns surrounding these companies. They've been under scrutiny, but still a huge year for tech. And outside of the technology sector, really, it's just been every day there's been something that helps the major averages move higher. Of course, we've seen Disney continue to push higher thanks to all that buzz around its streaming service. I know I saw a lot of people posting pictures of them watching Disney Plus, so that was a huge hit, as many anticipated. And then you have the Fed, where Jerome Powell just came out again and said that he plans on seeing monetary policy basically being stable for the time being, unless there's any major changes, while Donald Trump continues to tweet his displeasure with where the Fed is at right now. So that's been interesting to watch. But still, all those types of things, potential negatives, have been pushed to the side. It's the old wall of worry thing here. Stocks are climbing despite all these potential headwinds. So it's interesting. It's interesting to see stocks keep pushing higher here despite all these things. But let's switch gears. I like to get specific here. And today, in fact, we're actually going to go to the private sector because I wanted to talk about this clothing company, RotoWear, that makes T-shirts. They call themselves the undisputed T-shirt champions of the world. And the reason that I think this company is worth talking about is because they show how powerful social media is, a strong internet presence these days, especially we're against the backdrop here of poor earnings out of the retail sector. So a lot of companies are struggling, but certain companies like this, RotoWear, because they are small, they're independently owned, they have the flexibility to have a business model that's really fitted for 21st century economy. And what I mean by that, if you're not familiar with RotoWear, basically they take trending topics and they make T-shirts out of them, whether it's just a picture that they put on there or a phrase, anything that's gained a lot of traction on social media, they gain on it. Specifically, I could bring up that last night there was this incident with U.S. Representative Eric Swalwell. So that instantly became a big meme on the internet. It was trending, and boom, just this morning, RotoWear comes out with a T-shirt right on that topic, a big picture of his face. If you don't know what I'm talking about, go Google it and you will see what happened. But this is just the latest in a line that RotoWear has of every day they're coming out with these types of shirts on trending topics. So they're really able to take advantage of what's happening on the internet, get that niche customer, and get the product out there. I've already purchased a few RotoWear shirts because they're fun. They're fun shirts, and they're also comfortable. So I just wanted to point them out as an interesting way that some retailers are using their digital presence to drive sales, really develop a brand, as RotoWear has certainly done, and use that digital presence to directly interact with customers. And they're to jump on those impulse buys, because that's exactly what they are. You see these shirts, they're cool, they're affordable, and you buy them. So I definitely think this could be a trend we could see going forward, like this close out in real time based on things that just happened. RotoWear will get some competitors for sure, but I like that company. Wanted to give them a shout out as a good example of someone that's got it figured out. Getting back to the public markets now, I want to touch on Google's Stadia. That's its video game streaming service that just launched this week. And I was reading a lot of reviews about it, and people had some mixed feelings about how its launch went and the product itself. But I would just urge everyone to be patient. This is very new technology, and it's something that's going to change rapidly over the years. There's going to be more people coming in. So I wouldn't put too much stock into these early reactions into Google Stadia. I'm sure there's cool parts to it, cool elements. Multiple people on the reviews that I read said that it was cool to just be able to get the game instantly and play it, because if you're not familiar, usually if you buy a game digitally, you have to wait a long time for it to download. But with Stadia, it's all right there in the Google Cloud, so you just stream it to your TV or however you're playing, and boom, that's the game you're playing. It's $10 a month. There's supposed to be a free version coming out next year. So as I said, it's even planned to evolve. It's going to evolve drastically over the years as you get better internet access to more people in more places. This thing is going to be probably pretty cool in the next few years. If it's not Stadia, it's going to be someone else, maybe Facebook, whoever else comes into this space here and tries to do video game streaming. Other companies, Microsoft definitely is going to be a big player. So we'll have to see here how fast Stadia evolves, and if some of these technical glitches play themselves out in a longer time frame than expected. Right now, you expect it within a couple years or so to at least get the main technical stuff down. So let's just pump the brakes there on that criticism. Something else we need to hit here is what's been happening with marijuana stocks. If you haven't seen any of these stocks, they have been getting crushed. They're all trading at new lows, and it's amazing to see the trend that's played out here where you had the maximum rise and the maximum fall. Number of marijuana companies in focus. You just had Aurora Cannabis, ticker ACB, report pretty poor results, give a dismal outlook, and lay out a number of cost-cutting measures there. And of course, we just had Canopy Growth have a huge loss, hitting record lows on its third quarter loss. It came in bigger than expected. That was last week. If you remember, we had Tilray, ticker TLRY, while back trading at $300 per share, and now that stock's down below $20 per share. So it's been brutal, and a lot of people probably lost a lot of money on these stocks because they were in the news a lot. You probably had a lot of retail traders buying right near the peaks on a number of these stocks. I even had people texting me asking me about marijuana stocks because that was such a hot trend. And it's interesting that when they were going higher, they were getting a lot of coverage on the major financial news sites, and this downfall really hasn't generated that much buzz. Of course, we have all these other things going on in the market right now, but man, these stocks have been absolutely destroyed. So that's definitely been one of the bigger stories in 2019, I would say, is just the demise right now of the marijuana sector. And of course, that's a good learning point for anyone considering trading stocks like this, especially ones that are in the news a lot, that they can make moves like this on the charts and make such outlier moves to the upside and then come all the way back down. So always be careful trading something that's constantly on the radar, that's constantly generating headlines. And when you have random people having random conversations about something in the stock market, people that you aren't usually discussing those types of things, it's never a good sign for your investment when everyone seems to be going in on it. Speaking of good investments, though, AMD, Advanced Micro Devices, continues to go higher. It just notched its 7th straight weekly win, something that we looked at on a closer level. We did a study here looking at historical results when this type of stock, AMD specifically, has this type of technical performance. So you can check that out over on schaefersresearch.com. But you have AMD has been one of the biggest leaders this year in 2019, more than doubling, easily doubling in value. So that stock continues to be red hot, helping the tech sector drive the market, as I mentioned earlier. And we should also call out its sector peer, Micron Technology, ticker MU. We just laid out what was a huge options trade on that stock. Over on the website, it was millions of dollars. This one trader seemed to pay up for Micron with earnings a few weeks away. So to go check out that options trader bets on Monster Micron move over on the website to get more details there. I also wanted to call out the auto sector, specifically the car makers and car parts stocks as well, because that sector, how we look at it, has been one of the best performing this year based on the fact that almost all the stocks in that space are trading above their 80-day moving average, which is a contrarian moving average that we like to monitor closely. It's one of our favorite trend lines. And one stock that we were looking at in particular that does not get a lot of attention is LKQ Corporation, ticker LKQ. That stock has been an outperformer in 2019. That is an auto parts stock. And actually, when we looked at it closer, the only stock in that group that wasn't above that moving average was Ford. Ford stock has actually been under a lot of pressure recently. It's in a pretty tight downtrend, so that is not looking good on a technical basis. But again, LKQ is one name from the auto parts space that really on the uptrend. And we also got a 5.2% stake from Value Act Capital in October. So it's getting some support from larger investors as well. And two strong stocks from the healthcare space that we looked at recently. Centene, ticker CNC. That stock is a health insurer, if you didn't know, was a big beneficiary actually of Obamacare. Many people have pointed out that helped that company tremendously, as other health insurance companies as well. But Centene recently has been spiking the new highs. You had a note from Cantor Fitzgerald, a brokerage firm that was calling out Elizabeth Warren's Medicare for All plan, specifically suggesting that she's somewhat backpedaling on her original outlook. And the brokerage firm also just suggested that Medicare for All in the U.S. will not be law anytime soon, which is good news for the insurance companies. So that was an interesting stock to take note of as well. And a lot of call trading on Centene in recent weeks. Heavy bullish activity there to take note of. And holy cow, we have to mention Karuna Therapeutics, ticker KRTX. That stock shot up more than 450% on Monday this week, and today it's up another 30%, surging to $124. It was below $20 heading into the week. So this comes after the company's schizophrenia drug performed well in a mid-stage trial, meeting its main goals. So the company planning on meeting with the FDA next year. But again, Karuna Therapeutics, one of the huge winners this week, ticker KRTX. And I know I said two stocks from the healthcare space, but I'm also going to mention Vertex Pharmaceuticals. I saw that stock was popping today as well. It's really broken out in recent weeks. That is ticker VRTX. It is working with CRISPR Therapeutics on multiple fronts. So more positive data on that partnership today. So definitely a name to keep track of, jumping all the way up to almost $215 per share today. And back in October, it was down at $165 a share. So Vertex Pharmaceuticals breaking out. And that's going to do it for this week's episode of the Schaefer's Stock Market Podcast. Thank you so much for listening. We will be back next week with another episode to give you quick updates on the stock market and other business news. If you want, check out Schaefer's on Twitter, on Instagram. We're constantly posting stuff over there, at least on Twitter. We're trying on Instagram. We're trying to boost it. But as I said, we'll be back next week. Thank you again for listening. Subscribe wherever you are listening. I will talk to you guys soon.